Hello, good people. This is Emmanuel Sani Safari again bringing you the actuary's promise that is going to be demystifying the risks that surround us on a day-to-day basis. Whether we are workers, whether we are entrepreneurs ourselves, whether we are just a lay person, not doing anything, but we are still surrounded by the risks that happen on a day-to-day basis. So today I want to concentrate more so on the workers and also talk about the traders, because we're in a season, the new normal, where many things are happening. Just this morning, today was a rainy day, and I know this month has been a rainy month, and we have been seeing floods, and they really damage people's goods and businesses, and we have to start from scratch. But we can't remain in that kind of cycle every other time. We need to get solutions. But where do we come from? I think that's where we need to start from. As Africans, we have had this Ubuntu culture, the kind of socialist environment we used to live. We were each other's brothers' keepers. We never would suffer loss or damages or any accident. The neighborhood would sound the Gwanga Mujay drums. These were alarm sounds that there is a problem at so and so's place, and they would come, they would rush quickly, and they help you get back on your feet. But fast track in the 21st century, we are now in the capitalistic environment world. Things have changed. We actually don't know each other's neighbors. We live in apartments and you don't know your neighbor, just because we are not trusting each other very well. But how can we solve that? Slowly by slowly, possibly there are communities, people have mobilized community watchouts, which are good, but before you go for the larger group, start by protecting yourself. And now it's very possible. How can we do that? Today I could talk about the domestic insurance package. As homeowners, there are those of us, yes, we all belong, go somewhere to sleep. That's your home. If you feel you can sleep in the grass thatched house, that's still your home. But I believe many of us interact and stay. We either rent or we have our homes, and we have our furniture, we have our phones and things like that. And there's what we call the domestic package insurance. You can safeguard all your items, whether furniture, whether jewelry, whether your phones, your laptops, whether your cameras. You have to get an inventory of all that. Look out for an insurance person to work out the numbers. I'll show you an example of how much someone can we can charge them in a year, and we cover that kind of risk, because that is what an insurance company does. It mobilizes all people like that with such similar risks, bundles them and charges a premium that is equitable, is fair to all, so that should anyone get a problem, it is from that pool of funds that we use to compensate the unfortunate few. This is an example of the homeowners or domestic package, and this is what we use. It's an example. We always look at how long we're going to cover, the period and the place, the location, then the cover, then the sum insured. So this is an example of someone owning a home in Masanafu, let's say, worth 120 million shillings. And we are charging a rate of 0.15% for the whole year. So the annual premium for such a client is 180,000. But we also have their furniture. Let's say if they have furniture worth 10 million that has been installed in their home, we're charging at a rate of 1%. of which this rate can actually go to 0.75%. Let me just show you that. So that could be about 75,000 for the year. Then all risks, these are the portable items, like phone, laptops, worth say 8 million. The rate is about 3%, such that this premium comes to 240,000 within the year. Public liability, damages to neighbors, property, or life. Again, I told you examples of someone's fence breaking and collapsing on some of people's items. That can be covered for about 60,000 for the whole year under this package. Workers' compensation for the casual staff laborers, say worth say 30 million, because this has to be based on 5 years earnings. So for casual laborers, it will be about 0.6%, but that's 180,000. So with the tax implications of everything, this premium, this client is going to be charged worth about 906,000 for the year. Yet their exposure to the insurance company is actually about 188 millions. So what could make you wait to be covered under such? So there are so many other extensions designed to the property. This we can go into details at a later time. But also, again, we need to talk about as workers and entrepreneurs. In fact, Uganda has one of the highest entrepreneurial rates. We are an entrepreneurial country. We easily start businesses, but the challenge is on sustaining them. I know many people, many organizations have talked about this, whether it's PSFU, Private Sector Foundation, whether it's CASITA, whether it is UMA, that is Uganda Manufacturers Association. All these have talked about the issue of sustainability of our businesses. Of course, it's not easy, but we also need to wonder why. People have been talking about in business schools, people have talked about how to start businesses, and many times we get excited, we have capital, we mobilize from our neighbors, we start a business, but whenever any small shock happens, we're back to square one. For how long shall we be going back to square one? Instead of becoming a population or a society which has a fallback position, such that whenever you get an issue, you can fall back, but you bounce back with the help of an insurance company or with the help of the insurance industry. And it's very possible. So these are the things that I want to show you. But also we need to, so there is a package for traders that has been introduced by many insurance companies, which I'll call them to actually talk about more of their services and more of their promise. How long are they going to be paying these things out? Because again, I told you a kind reminder, insurance is in the business of paying claims. When there is any dispute or there are delays, then there's an integrity issue in that aspect. But this program is here to, first of all, educate you, but also to empower you to know your rights, to know how much you need to spend out to actually benefit much more, so that we are not victims of shock any longer. So I want to talk about the Workers' Compensation Act of 2000. This is something that is actually a regulation under an act of Parliament, the year 2000, that was set out to protect workers in different spheres, whether in the factories, whether in the office spaces that we work in every day, whether it is just outside. You need to be protected against any accidental injuries. Yes, last time we talked about medical insurance, which is a benefit. It's not a must, it's a benefit for those key staff. You can demand for it any worker out there. But shouldn't you get it, you should ask and demand for the workers' compensation. Whether you're at a factory, whether you're working in a supermarket, whether it's a pharmacy, you should have it. It's just like the NSSF Act. Yourself as the staff have to contribute 5% of your salary for that fund, and then your employer contributes 15%. So that's the NSSF Act. The Workers' Compensation Act requires that the employer takes out insurance such that should you suffer any accidental injuries, whether it's the border injuries we have on a day-to-day basis, whether it is the factory cutting off one of someone's finger while in the factory, these machines, heavy machines that we see, whether it is floods that happen and we see people drowning, all those can be taken care of under the Workers' Compensation Act. But now there's also an upgrade to the Workers' Compensation Act, which actually pays. It states and demands that the employer has to take care of 5 years' earnings should any of those accidents happen. So with that, we look at what your salary is or is going to be. We look at your designation, that kind of work you do, and we charge you accordingly. This is the group personal accident stroke the workers' compensation. Strictly say for the workers. This is say traders in Kampala store. Of course, it's covering 24 hours and worldwide. And this is an example of about 100 employees, each earning about 500,000 per month, such that the gross premium monthly salaries for such an organization is about 5 million. This is on a monthly basis. This is their wage bill, because you're counting this 5 million times the 10 staff on a monthly basis. But what we are covering is the 5 years earnings, the capital sum insured, which is 60 times. This is 5 million times 12 months, then times 5 years, that's 300 million. That is the exposure of this client. So the premium allocation would be about 900,000, but plus the implications of taxes, including PVT, what is political violence and terrorism cover, that's about 1.1 million. And what is covered is death, 5 years earning, permanent disability, 5% plus 25% sum insured if the claimant requires. There is so much detail that we can go through, including funeral expenses. The journalists who go out to work and they get tear gas, they get hit and broken, if they didn't have this workers' compensation, they lose out a lot. So there's also an upgrade to that, which is called the group personal accident, which covers actually 24 hours. Unlike the workers' compensation that covers only 12 hours during the working premises, maybe in the factory or the office space, out of that space, your cease being covered until you really explain to the insurer. The group personal accident covers 24 hours, and it's actually more worldwide. Yeah? So there are those clients or people who move a lot, you will still be covered, even outside of Uganda, as long as we can document that risk whenever you got it from. So that is a brief on the Workers' Compensation Act. So with those few words, I would like to think about it, and let's always remember that we can turn our wounds into wisdom. Possibly I also suffered an injury that many of you know or have shared. When you see this scar, it shows I suffered a loss, a challenge, an accident last year in March, but I survived. And now I think I'm a wiser person. And I want to extend that wisdom to you as well, so that you easily bounce back whenever you get any challenge, rather than being victim of shock. Some people never do recover from that. So with these few words, let's go for a quick break and come back in a few minutes. Ugandans, we are an entrepreneurial community. Most of our businesses are SME, short and medium term enterprises that set up, open usually for a year or 2 years, and because we get small shocks, accidents, should I say, in our businesses will never stand the test of time. So today I want to talk about a trader's insurance package. It could be any business that we always see in the boutiques we move around, and the shops and the arcades we all see. Firstly, yes, some of the arcade owners own the buildings, but possibly have not insured the building. Maybe we can also sell them the idea, but many of them take their time. But you, the person having a shop in that arcade's owner, in that arcade, that shop, how have you insured your items? Because you actually stand a bigger loss should anything happen to that arcade. We have seen arcades collapsing. Just some years back, around Makerere, Ham Towers, there's a new arcade that was set up that collapsed around 2016, I think, if I'm not wrong. And it wiped up the tenants' property. So how did those people get compensated? Did the landlord compensate them? That's a question we shall ask, and possibly we shall go out in the field and find out. But do we have to be victims of shock every other time? And we start from scratch every other time those incidents happen? No. There's a solution to that. So traders packages. There are so many packages that we can talk about, but there's something that we design that covers about 7 to 8 packages, and I'll run you through them. That is the fire and special perils, or alleged perils. So what are those? So let's say start with fire insurance. I mean, that is something that can easily wipe out. That is a fire that will don't wipe out your business, the premises, and thus your stock contents, the stock that you have. So that is usually set up by electrical circuits causing the fire to the business, possibly because our electricity is not very stable. Usually it comes back in the night or during morning when people are not yet there, and we find maybe someone had not, there was some kind of short circuit, and the fire starts out and breaks out to the whole neighborhood, all the shops on the arcade. So you're a victim of shock. You are not the one who started the problem, but how have you prepared for it? And many times you're just fellow tenants. So if the other tenant disappears, you're also going to be a victim. So we can insure just your business, your stock, by looking at the maximum stock levels that you can have at any one time, such that should any of those kind of issues happen. We have been talking about the trader's insurance package. This is an illustration that has about 7 packages. I'll take you through each one of them so that you know what the total exposure as a trader you'll be having. And yet we shall also look at the premium illustration, and then also how you can pay this premium. Instead of paying for it at once, you can pay using what we call the IPF, or the insurance premium financing, where you can pay over 10 monthly installments, such that you can reduce and improve your cash flows over the year. Now, this is an illustration of a client having and a package of about, their stock, their maximum stock intake would be about 250 million, meaning on a day-to-day basis they may be having less stock, but their shop or premises have a capacity of about 250 million in terms of stock. Now we break down the stock to about 90% to take care of the stock, and then about 10% to take care of the fixtures and fittings within the shop. It's about 25 million, and then the values of the stock inside the shop at any one time. The maximum stock that can be there at any one time is 225 million. So for such a client, we will charge about 562,000 for the year, and then with the implications, the tax element, it will come to about 702,000 shillings for the year. including the stamp duty. And with the package policies, we actually only charge stamp duty for the fire policy. The rest, we don't charge the stamp duty, as you'll see. Section 2 is the business interruption, which is as a result of Section 1. Whenever the fire or alleged perils, and remember we talked about the alleged perils being the floods, the earthquakes, and the like. Whenever those things happen, your premises will take some time to be replaced or to be repaired, because premises building takes time. So instead of, while waiting, because remember we would have paid you 250 million to take care of that challenge, but while you're waiting to get your capital back in business, you may need some more money to help you relocate to another area. So that comes under the business interruption. So this is an illustration of a package, maybe about, we're looking at about 15% of the business value, which is about 62 million. So you break it down under group gross profit and also increased cost of working for your workers. And this indemnity period is about 6 months, meaning that these 62 million that we are going to compensate your business as a result of the damages you're going to suffer within those 6 months after the fire hazard has happened. So for that, you're going to see the implication, the premium implication is so little. It's about 125,000, inclusive the taxes, which is not just the VAT and the training levy, of which we're going to bring another partner, our training college, insurance training college, to elaborate more on that. So let's go to the third section, which is burglary. Burglary. I mean, you don't stay in Uganda until without knowing burglary. We have thieves day and night who can break into your premises, and whenever they break in, they don't steal everything, but they can only take a certain portion, of which we want to look at under first loss value or mechanism. This is to reduce on the premiums you would have paid should we have insured all the stock to be taken at one go. Much as the exposure still remains at about 250 million, which we can look at a rate of 0.1%, that's 250,000 for the year. And then first loss, about 10% of the 250 million, where we charge 1%, such that the total loss here is about 227,000, 275 million within the year. And then the premium allocation for it is 592,000 for the year. On top of that, there is another package under the fire and allied perils, that is business interruption. This usually comes as a result of already having the fire or element, so such that during that time you have suffered loss, the premises are down, let's say by floods or by fire as gutted. Those premises will take some time to be put back again. So during that time, about 6 months, could even be 4 months or a whole year, during that time you're losing out profits as a businessman. You can have this package to help you have this short sub money on top of on your hands to help you move the business. Maybe to also relocate your office or your shop to another place. Without this business interruption package, you will be able to run and to keep your key staff members. So section 4 is the money insurance, and this is a package, or this section, money insurance, used to be a preserve for only financial institutions. So it's just about 5 years ago that we also allowed traders and enterprises to also have it under their traders package. So whether it's a supermarket, whether it's a pharmacy, you can also insure the money that you have at your disposal. And there are about 5 sections we look at under this particular section of money insurance. This is the cash in transit from the insurance premises and vice versa, maybe to their supplier. Then there is also cash in the insurance premises during business hours, cash with the authorized officers like managers or supervisors, then cash in premises inside a safe but outside of business hours. That is the money, the float that you leave behind. And then there's also what we call estimated annual carry. We need to have visibility or an illustration of how much money you move within the whole year from your business premises to the bank and vice versa. So this is an illustration that shows you how much this client's business is covered under the money package. This is very interesting because a few years back, this was a preserve for only financial institutions like banks and microfinances, forex bureaus, but now it has been extended to the traders. And we have these 5 sections. There's cash in transit from the insured's premises and to the bank and other places, and maybe suppliers. This is an illustration of about 5 million, where we're charging 1%, that is about 50,000. Then cash in transit during business hours, that is 5 million. That is about 50,000. Then cash with authorized officers, that is 4 million at 2%. That's about 80,000 for the year. Then the cash in the insurance premises inside the safe outside of business hours, that is 5 million and at 1%. Then there is estimated annual carry. This is another element because there's a 5 in one element under money. So this is the total exposure that this client has at any one go. Bring the premium for such a client about just 322,000. That is for the year. I mean, which business person wouldn't want to have this kind of package for themselves, so that they are covered, the money that they have at any one time, which is the most treasured or the most it has most exposure in terms of risk. It is something that is very valuable. Everyone looks at that money and can easily steal it. They can come in with guns and things like that. They break in to take the money. They may leave the stock, but they are more interested in the money. Section 5 is the goods in transit, which is about, again, we look at an illustration of about 10% of the business value, which is about 25 million for this example. And we also have to break down how much you transport on a monthly basis, which will come down to this. Yeah. So such that for a single transit, it would be about, say, 2 million. But for the whole year, it comes to that. But all these are just details. We shall look into all that at a later time. Our Indian community traders are having over the Ugandan ones, because for them they actually sell it as a benefit to their customers and they tell them that whenever they come to buy from their shops and anything happens to that person's goods, the client's goods, while on transit to their premises, to their homes, or to their shops outside of that warehouse or that shop, they would be covered. They will be insured. Yeah, because many times we see that you hire out vehicles as a trader to deliver these packages as an added benefit to your customers, so that you can keep your key customers. But those goods sometimes are given to reckless drivers or people who are in a rush and they make accidents. Possibly their cars are insured. They can run very quickly and get some compensation for their insurance of the car. But your goods that you are given to them will suffer. And if you don't have this kind of package, you will suffer a loss that may break your back. The public liability. And for any business, this is something we are beginning to see a lot, because our community is fast becoming a litigious one. Litigious meaning our neighbors can easily sue you, or your customer can actually sue you. So should anyone want to come and sue or have an out-of-court settlement for suffering damage or loss as a result of your product or your service at your premises, and they get sued, it could be a pharmacy selling drugs, and these drugs possibly expired, or they cause an adverse reaction to the customer. It could be food poisoning in a restaurant business, and someone sues you. also the business for having given them bad products, someone can sue you. It could be uh, people who are living on apartment floors, flats. You know, an item can fall off that your premises and it hits the neighbor's child, takes out an eye. All that will be taken care under the public liability issue. It could also be now in the days of rainy season, your fence can actually collapse on people's vehicles, your neighbor's other property. And should it cause damage elsewhere, then you, with this package, you'll be able to bounce back. So last but not least, we are also in a political season here in Uganda. There's what we call PVT, that's political terrorism and violence coverage. So should any of these risks happen, and on top of that, they're aggravated by the political riots that we are seeing on a daily basis, could be strikes, demonstrations, those can also be taken care of under such a package. So, what are you waiting for to be insured? I mean, imagine such a client with a premium of all these 7 packages. The business was based on 300 million under his fire package, but we're looking at the total exposure being about 619 million for the whole year. But this premium within the whole year is about just 2.9 million. And at this juncture, actually, I want to talk about the solution we have gotten for our clients who can't make, because of cash flow problems, they can't meet this premium at once. So we have arranged a mechanism with several banks to do what we call an IPF, insurance premium financing, whereby you don't have to pay all this premium at one go. We can break it down for you. You pay over 10 monthly installments at small interest from the banks. They usually charge about 7% right now. And I'm sure this rate will go down whenever the banks become more competitive. So this is something that we can promote so that many traders get insured at a reduced premium expectation, but also with not breaking their back in terms of cash flow. And should anything happen within that time you're still paying the bank, you will still be covered. The insurance company will still take care, because the insurance actually, the bank will pay the insurance company as soon as the first check clears off. So with those words, I want to thank you for your time and your attention, and reminding you to actually always hope for the best but prepare for the worst.